Okay, guys, it's that time again. It's that weekly check. We look at the property market for the last week in March. Now, I'm going to reveal how you could have invested 26,000 10 years ago, and it would have given you a 245% return on investment 10 years later, right to today, up to 245% if you had invested £26,000 10 years ago. But before I do that, I'm going to go round and give you an update of the weekly market and what happened in the Fife property market in the last week itself. So let's look at some of the numbers. Okay, so in the last week from the 28th of March to the 3rd of April, which is yesterday, right across the regions of Fife, the number of properties coming on versus the number of properties sold. You have 13 coming on the Cooper area, 12 sold, East Neuk 4 and 4, St Andrews 11 and 6. That's actually quite surprising. That's an oversupply in St Andrews again, and less getting sold. So there's a wee bit correction coming up. Maybe the market's reached its peak in St Andrews area. Leavenmouth, you've got 13 versus 7. Again, there's maybe a wee bit more properties coming at the market in the Leavenmouth area than that's actually been sold. So prices might actually begin to stabilise in the Leavenmouth area. Dunfermline 34 versus 41. Glenorthis 18 versus 13. Again, same trend. Now this is a big change from all the successive weeks before. Where the market was clearly demand was outstripping supply, and it's beginning to turn. Kirkcaldy 41 versus 36. So let's look at what next week would do as well. I'm a big fan of looking at month to date as well. So let's look at the months itself. So we'll roll on to the month of March. So this is a 5-week month for me in terms of accountancy. This is how we operate. So the Cooper area for the whole month of March, 55 versus 59. East Neuk 11 versus 19, St Andrews 50 versus 40. Look at St Andrews for the whole month. 50 properties have come on, only 40 properties have sold. 80% of demand. Therefore, supply is outstripping demand. Therefore, we shouldn't see huge price rises in St Andrews or huge offers getting offered at the end. However, it's not what we're getting. Some of them we're getting 20% more. So Leavenmouth 59 versus 72, huge demand there. Dunfermline 208 versus 230, Glenorthis 77 versus 75, Kirkcaldy 195 versus 182. And overall for the month of March, 655 properties came onto the market to be instructed, and 677 properties were actually sold or under offer in the same month. Again, showing there's a bit of stabilisation there. We're getting to whatever's coming on is actually getting sold in terms of the numbers. And that's the most important thing you should look at, because that will give you a rough indication about where you should be offering as a buyer for the price at the end. If the market is stable, then you should be offering probably around about the home report value. If the market is there's more demand than supply, then you should be offering more. If the market is there's less demand than supply, then possibly it could be under. It depends on how good your estate agent is at negotiating for you as well. That's really what it comes down to. So let me talk about one of the most important things in property market in the last 10 years. There's a link to the blog on here, and I'll go through these numbers. Now, this is the property market. Now, this is the average price in the last 10 years. So this is 2011 to 2021. This will give you a real good, strong indication about why you should have invested in property 10 years ago and why you should invest in property right now. And this is the key. It shows you. So, we've looked at these. So these are the average prices right over the Fife market. So an apartment 10 years ago in 2011, on average, right across Fife, for an apartment or a flat, you were paying £81,600. And for today, you're paying an average of £113,300. Now that is a significant increase of 31,000 in the actual value of the property in a 10-year period. Terraced houses, 186,600 versus 135,000 today. That's a huge jump in terms of terraced houses. So that means there's a 41% jump in the price. The semi-detached houses, even more revealing. The average price paid in 2011 for a semi-detached house across Fife was 101,300. Today it's 164,700. So if you'd invested in property in a semi-detached house to rent in the last 10 years and kept it, you would have an increase of 45% in the value of the property. And we'll look at detached as well. We've got 162,400 10 years ago. It was for an average detached property, going up 43.5% in the 10-year period. It is now 264,300 for a detached property. So what does this tell us? And where we should be doing? This tells you basically that you should be doing buy to let, and I'll show you why. Let's look at another graph. So I'll look at my spreadsheet, and I'll give you a look at that. So let's jump onto my spreadsheet itself. See if I can get it up here and here. Just jump onto that just now. Here we go. Okay, so this is the 86,000. This is an average terraced house. This is a 3-bedroom terraced house in 2011 that you would have paid for on an investment property. So you would have bought it at 86,600, which was the average price paid right across Fife for a 3-bedroom terraced house in 2011. Now you would have paid. Now you pay 4% stamp duty. At that time, you probably didn't, but I'm factoring it in anyway. So 4% stamp duty because it's a second home. You'd pay a 25% deposit on there at that time, and you would have mortgaged the rest. Now, interest rates have been a record low, about 0.75 and 0.5, and now it's 0.1 base rate since the credit crunch. So I'm assuming, and I'm going to be quite prudent here, over that average time for the last 10 years, a mortgage for buy-to-let is about 4%. Now, to be honest, it's probably been a bit lower, but I'm going to be average. I'm going to be prudent about it. So 4%, and then you've got 1.6% arrangement fee. It's £1,000 for an arrangement fee, typically for a buy-to-let mortgage. Now, typically a 3-bedroom property at that time would have rented for £495 per calendar month. Now, today, a 3-bedroom property on average, just across Fife, in that sort of price range, would be round about the 550, possibly 600, 650 amount. So I'm just taking 495 now. So let's be prudent again and say 495. So if that was 650 today, that same property, because you'd held it, you'd be looking at a huge return in there of 10.8% net return. But we'll change it back to 495 just to be prudent about it. So 495. So in that period, for the 10-year period, we're assuming you've kept it fully occupied, you would have a return on investment of 245%. And in that time, there's the 48,800 an increase in an average property over the last 10 years. Each average property has grown 5.64% in the last 10 years, every single year. So there is your capital appreciation. There is your profit from keeping your property occupied. And there is the return on investment, which is the 26,000, which is £1,000 for your solicitor's fees, your stamp duty, and your deposit added in. So 26,000 in has reaped you 64,000 almost in terms of return. And that's a 245%. Sorry, what did you get in the bank? Nothing over the last 10 years. That is why investing in property is the best thing to do. So the key here is, even if you kept this empty for 6 months of the year, we'll go right down, you're still getting by and you're still making 165%, even though that property was empty for half of the whole year. That's in that scenario. If it was empty for, if it was filled for 3/4 of the year, so 8 months of the year, you'd still be looking at 192% investment on return on your income in. So that's a classic example why buy-to-let is probably one of the most important. If you invest in a property right now in 5, 10, 15, 20, 25, 30 years, it'll grow with capital appreciation all the time. It is a byproduct of keeping the property occupied and keeping the property over a period of time. That's all it comes down to. All you need to do is make sure you service the debt, which is the mortgage. If you want to buy for cash, it's a completely different scenario. You have no mortgage to service. Therefore, the capital appreciation would have been, you'll make 48,800 on whatever you put in. So if you put in 86,000, you would have made 48,800 on that 86,000 plus the rent itself, which would have given you an even higher return. So you would have made at least 48 versus 86, you would have made at least more than 50% return on your investment, just for putting cash in. What did you get in the bank? Zero, almost. Nobody's had anything in the bank. This is why buy-to-let and invest in property is the way forward, and it always makes money. I have been doing it for 30 years almost, and I can guarantee you every single time as years pass, prices of property go up as a natural result of appreciation over the years. And that's it, guys. You know, that's what I would say is the best investment you could ever have in property. So we'll take a look at some of the other things. I've put that article on there about the Fife property market and how the average prices have gone up over the years, and also how new build homes as well. I mean, there's only been roughly about 12,000 new properties built in Fife in the last 10 years. That's only 99 properties every single month. And yet, the number of people born and the number of people still living longer than expected has gone up as a result. And it's not taking into account that 99 properties every single month. It's going a lot more than that. It's needed as a result. Therefore, housing is restricted in supply. Therefore, demand for housing is more and more every single time. Therefore, how prices of property goes up over a 10, 15, 20-year period. That's the classic example of how they always go up. So in the next 10 years in the Fife property market, well, trying to predict it would be a fool's game, but I will probably more or less guarantee you that, again, as before, the 30 years before I've had, property prices will continue to go up and up and up and up. And that's why buy-to-let is a really good investment. If you want more information on that, please feel free to message me direct. I'm happy to have a one-to-one Zoom with people as an initial consultation to show you these numbers in detail based on what you would like to achieve in your investments and in your property. That's really what it comes down to. Okay, so then we'll talk about other things as well. I've got another article in here. What do buyers want? The 5 fundamental factors that turn viewings into sales for homeowners. So we talk about things in this, and it was a show that we did yesterday. So we've done our show. I've given away a lot of secrets about the key fundamentals of how to drive that price at the end of the property to make you more money and give you more money in your pocket at the end. This is not, when you choose an estate agent, it has nothing to do with fees. It's their track record and how they drive the price at the end. And you should be asking them, how much more on your average property do you get more than the home report value? That should be one of the deciding factors in why you should choose that estate agent. That's really what it comes down to. And what do you do to achieve that? And how do you do to achieve that? And how do you drive that price up at the end as a natural result? It's not about fees. Trust me, that is the third thing. There's 2 other most important things that come before that. And that's that as well. So we've talked about that as well. And finally, I've just talked about, if you're looking, I've done a wee thing for Windmill Gardens, which is in St. Monans. It's 30 bungalows for Lucky Homes. I did a vlog earlier on this morning to tell everybody what's happening with that development. If you're in the line to phone up and actually get in that queue to reserve one of these bungalows, there's more information on there. There's also criteria there which they will expect you to have met. For example, they will ask you, do you know the current value of your home? Do you have a mortgage in principle, or do you have a strategy in place for if you get this property reserved and if you're moving on from there? The other thing as well, there's a wee ready reckoner on this post, which is an instant valuation tool. It does give you a rough idea. Well, actually gives you quite an accurate idea of the value of your property if you put the criteria in. It takes literally 60 seconds to do. You don't need to speak to anybody to get that valuation. It gives you the top end valuation, the midpoint valuation, and it gives you the bottom end valuation. And you can decide where you appear in that valuation process based on the condition and quality of your house. And that's really what it comes down to. So if you've got any questions, please feel free to message me direct here, as I said. And until next week, guys, I'm Jim Parker for Fife Properties TV.